My name is DaVatrice Lindsey, and I'm the attorney for the Neighborhood Entrepreneurial Law Project, known as NELP. It launched in 2018 for individuals and for-profit small businesses. We provide residents of the Palm Beach County area the tools and knowledge to be successful in starting and or owning their small business. We also supply limited financial assistance for business registration, logo design, home occupation affidavit, and more for eligible applicants. We furnish webinars and podcasts regarding important business topics, such as the topic for today. I have the pleasure of introducing the presenter. Ms. Maria Gaitan spearheads Consolidated Credit's community outreach and involvement and has been called a force in the world of personal finance. She oversees over 100 relationships nationwide that disseminates personal finance education programs and training. Her efforts reach thousands of low to moderate income Americans each year that assist them in becoming financially stable. Ms. Gaitan has 20 years of management, lending, and business development experience with the third largest banking institution in the United States and 12 years of nonprofit management and program development experience in the credit and housing counseling industry. Ms. Gaitan knows how to get a job done, and she has the necessary skills to train people who wish to achieve goals such as buying a home, building credit for business, credit score improvement, and more. Ms. Gaitan has been a featured financial presenter, and has appeared in news broadcasts and radio programs throughout South Florida. She is also dedicated to helping our military and veteran community and is a member of Broward County's Mission United's Advisory Council. She has served in over 20 national and local board of directors and advisory boards of organizations focusing in community development, education, and the fine arts. She is a graduate of the University of Nebraska at Omaha with a Bachelor of Arts in Marketing. It is my honor to introduce to you Ms. Maria Gaitan.
Wow, DaVatrice, thank you for such an amazing introduction. Wow, it is actually my pleasure to be here. And share, spend some time with all of you today. My name is, again, Maria Gaitan, and I work for Consolidated Credit Solutions. Let me go ahead and, if I may, right now, excuse me, one second. Okay, here we are. So, I am, my name again is Maria Gaitan, and I work with Consolidated Credit Solutions. And here, just bear with me one second, my slide. Why is it not doing this? Okay, here we are. Yes, I am with Consolidated Credit Solutions, and we are headquarters here in Fort Lauderdale. Our mission is to assist families throughout the United States in ending financial crisis and solving money management problems through education and professional counseling. And that, of course, extends, in my book, it extends to small business owners, okay? So we are here today to talk about credit. And I like to say that this presentation is about credit as an asset. I want you all attending here, all you small business owners, to think of credit as an asset. And I'm going to explain in a minute. But before we do that, I mean, can some of you tell me here, what do you understand that credit is? What would be your take on what credit is? Can somebody can you type something in the chat box? Give your opinion on what you consider credit is or what it means to you. Can you see that? Okay. Well, I tell you what. We don't have any input, do we, DaVatrice?
Yes, we do have input, and we have from Ms. Pedway, getting money to be paid back. We have from Ms. Alexander, credit is a history of the debt of business. We have from Mr. Zuniga, and I apologize if I mispronounced your name, How risky is a bank loan? And then we
Wonderful.
also have from Miss Alexander again, like a report card.
Wonderful. They're all great, great, absolutely correct definitions. I like to add one more and think about this. When you tell somebody that you're going to give them credit for doing a good job, or you gave them credit for turning their work in on time, you get credit. That means it's, to me, credit means recognition. Okay? And again, it could be a good thing if the experience is good, or it could be a bad thing. But today we're going to talk about how to make credit be a good thing for you, how to make it an asset for your small business. So you know, and you all said it in different ways, but it's really your ability to borrow money. That's what credit is, and that's what we're going to talk about today. So anytime when a bank, a financial institution, you know, or a business lends you money or lets you have goods, you know, to be paid later, you are committing future earnings, your future income, to pay that back. Okay. So with that, you know, I'm sure we all can agree that there's some advantages to having good credit. Okay. Can somebody, you know, share their opinions on what you think are some advantages to having credit, to using credit? Some benefits, some advantages? Do we have any input?
Yes, we do. It's just
Okay.
taking a little bit. I apologize for the delay.
Yeah,
We
that's
have okay, we have from Ms. Pedway, it helps to boost your credit score. From Ms. Johnson, lower interest rates. From Mr. Zuniga, the ability to borrow easily. From Ms. Bestman, approved for lower interest rates. And from Ms. Alexander, you can get loans for your business.
You know, I don't think I need to teach this class. I think these guys already know everything about about credit so far, but you are all right, all correct. And, you know, so credit basically allows you to purchase, to buy things today when you don't have all the cash, all the money to buy them. And so, for example, you know, a good example is like when you buy a house. Who has enough money to buy a house? So you use credit to do that, or to buy a car, or to buy, you know, to get some inventory. In your case, you might be needing some equipment, whether it's, you know, an equipment to produce your goods, or a computer, or office equipment. So also credit is a good tool for emergencies, okay? We all seen it now with unfortunate, you know, financial crisis that we're going through because of COVID. You know, people, some folks have had to rely on their credit to be able to buy groceries, you know, because they did not have necessarily the money or the savings on hand. You know, so another advantage, I think, is that when you buy on credit, when you use your credit, you know, a lot of the credit card companies, they give you a protection for what you buy, the products that you buy. And also, you know, if there is a situation where you're not happy, you know, with the product, you know, or something, you know, is defective, you know, yes, you're gonna go to the place where you bought it, but you always have that protection from the credit card company. And also, one of the things that I like is that when I use my credit card, this one particular one, I get points that I use then later to buy, you know, my tickets, my plane tickets if I want to travel anywhere. So those are some of the advantages. But then again, now tell me, please, what you think are some of the disadvantages of using credit. Oops,
Okay,
sorry.
Maria, we have from Ms. Bestman, how are these protections from the credit card company?
Well, you have to, yes, you have to look at the fine print, or you can even go into their websites. You know, the fine print is, you know, they may say something along the lines, you know, I don't know the exact verbiage, but you know, like if something is damaged, you know, they may when you get it, you know, they may if you put a claim, you know, you may be able to get a reimbursement for that. You have to look, you know, each one is different. I'm sorry, I'm not real familiar with the verbiage of the fine print, but it's all in the fine print. Or you can always, I suggest really call the credit card company. I'm sorry that I don't have more detailed information about that.
Thank you. And then to answer your initial question, we have from Miss Britt.
Yes.
Debt.
Oh,
at
debt.
a disadvantage.
Yeah, of course, yes. So, you know, credit also costs money. You know, people or banks or credit card company, they don't give you the credit, you know, for free. You have to pay interest, and sometimes you have to pay, like when you buy a car, you may pay some, like or a house, some closing costs. So there is a cost. Another disadvantage is, and I don't know about you, but when I had my kids were younger, they would wanted something, and I said, well, I don't have the money. My son would say, well, you have your credit card. So you tend to spend more money than you really should be spending, you know. And then the other thing, and I don't know if it's a disadvantage or not, but the you know, the credit, how you handle your credit can be used against you if for whatever reason you are not paying that credit like exactly as agreed. So, you know, there's some things to keep in mind, okay? So now we're gonna talk about the next thing, which I really like to cover here, is the 5 C's of credit, okay? And they are, we're gonna expand on each one of them. You know, the first one is capacity, then we have character, collateral, condition, and credit history, okay? So let's see about, you know, capacity. You know, when this is when the lender or whoever's giving you credit is going to be looking at your financial health. And there are a number of things that they're going to be looking at. They're going to be looking at your credit report. They're going to be looking at your income, at your, you know, whether it is you're making a salary, or if you have, if it's a business already, if you, what your profit and loss statement looks like. You know, because they want to make sure that you have the capacity to repay the debt. That's the bottom line. You know, then another one of the things that they look at is how long have you been, on, you know, doing what you're doing. If you're a business already, you know, how long have you been in business, and you know what kind of you know, sales or income you have. Sometimes, you know, in the capacity, when you're filling out, completing, you know, filling out an application, they may even ask you how many dependents you have. I mean, I'm not sure if that's actually a question that we're allowed to ask anymore, DaVatrice, but that I know that in the past that's been a question. Now, also, you know, capacity, when they're considering your capacity, they're going to see, they're going to look at your credit report and see how much you owe, how many loan payments you have to make, and you know how much what your debts are. Okay, so then and of course the debt to income ratio, this is important. This is the amount of debt that you have compared to amount of income that you're making. Okay, so those are things to keep in mind. So the when we're talking about character, okay, and this is again, and we're going to talk about the credit report in a minute, but this is something else that you know, that the company that is going to give you credit is going to be looking at. You know, do you intend to pay your debts? And how they find that out is by looking at the way that you have been paying your debts so far. You know, have you used credit before? Do you pay the bills on time? Do you have a good credit report? Does it look like you possess the honesty and reliability to pay your credit cards debts? And I say credit card debts because those are unsecured debts, and they are the easiest to stop paying because you don't have any, you know, any risk of losing a collateral. If, for example, if you if you're making car payments and you don't make your car payments, eventually you might run the risk of having that car repossessed. But that's not the same with credit card debts because they're unsecured debts, okay? Then collateral, okay? So collateral is tricky, okay? And let me just pull all three of this and I'll talk about them. So collateral is tricky. I am in the past, I think DaVatrice, you know this, but I was a banker for many, many years. And there were many times where I was, making, processing a loan application for someone. And they might have, let's say they wanted to get a car loan and their credit wasn't all that great. They weren't making all that money. And so, and they, some people would say to me, well, if I don't make my payments, you have my car that you can take back. Or if I don't make my payments, you can take my house back. Well, banks or lenders, they're not in the business of owning your house. They're not in the business of owning your cars. They want their money back. So that's but collateral is that extra security that they get, so typically you would hear that lenders are cash lenders, meaning they want to get their money back. They're not usually collateral lenders. However, this is an extra security. For example, if you have a savings account, okay, and people tell me, if I had the money, why would I want to borrow money? Well, sometimes, well, I shouldn't say sometimes, I would tell you almost all of the time, you should not necessarily use your money if you can help it. Use the bank's money or the lender's money. Why? Because having that savings account, even though you may pledge that as the collateral for the loan, it still gives you that security that as you pay that loan down, you recoup some of that savings that you can, use if you have to. So collateral is, again, if you buy, for example, a piece of equipment, and it's large enough, that may be the collateral for a loan. Or sometimes we have companies that will take your accounts receivable as collateral. So that's another option there. Then, and like I said, investments, like CDs or something like that, something else like that you can use as collateral. Okay, so the condition. This is super interesting, and I'm going to put them all up here. Condition, it could be the conditions of the borrower, the lender, or the economy. And of course, the conditions of the borrowers, they pretty much get summarized in the credit report or what the application. Sorry for the minor technical difficulties. As you know, this is our new normal, and sometimes things like this happen. But thank you. I'm glad that you all were able to come back in. So thank you very much. So we were talking about conditions, and this is an interesting concept in the sense that the lender may have conditions. For example, sometimes when a bank is getting ready to merge with another bank, they may pull back and not make as many loans per se, or issue as much, credit as easily as they would normally. And then again, you have the economy. Like right now, I can tell you the conditions are a little bit tough to get credit, because the banks and the lender credit card companies are actually concerned as to what's really going to happen with the economy. So I've even heard that I know for a fact that some credit card companies have actually gone into customers' accounts and lower their limits that they had. So if you do not use a credit card and you've had it just in case, make sure that it's still available and it's open, because the credit card company might have lowered that amount or might have even closed it. So that's what we mean by conditions. And, so we talked about that. Now, credit scores, credit is going to affect, obviously, your history, credit history is going to affect your ability to borrow. The credit score is a factor, a big factor in determining how much you're able to borrow. In general, a higher credit score, the easier it is for you to get credit and the better terms you're gonna get, the better interest rate, maybe even longer terms as far as 3 years, 4 years, 5 years, or whatever it is that you need. Also, credit is important nowadays, for your insurance. Your car insurance, your home insurance, insurance companies are running your credit report to see how credit worthy you are. Sometimes, when you go rent, your landlords may also pull your credit report. And also, if you are applying for a job, employers can pull your credit reports. Now, both employers and your landlords, they cannot pull your report unless you give them the authorization to do that. So keep that in mind. And those are typically what is called a soft pull, meaning that they will, by them pulling your credit report, your credit score will not be affected. Okay. So let's talk about the credit score. The credit score is actually a 3-digit number. That's really what it is. But it could be high. It could be good if it's high, up to 850, or it could be not so good if it's low. Typically, if your credit score is in the 600 or below, your chances for getting credits are going to be a little bit more difficult. You might be paying quite a bit more in interest and in some of the other charges, that the banks and credit card companies charge. So the first thing is we talk about credit as an asset for a small business owners, because let me tell you this. I always used to tell people when I gave them a loan, credit is about after your family and your health. Credit is about the most important thing you can have, and that you need to be careful about, and you need to keep an eye on, because if you have good credit, you can have just about anything you want. But if you have bad credit, it's just really tough. It becomes a liability. Now, there are 3 credit bureaus, that keep track of your personal credit report. Those are Experian, Equifax, and TransUnion. Now, by law, by the Fair Credit Reporting Act, each one of these credit reporting agencies, by law, they're supposed to give you a free credit report each year. Okay, and now to get that, you go to here. There is it's on the screen. It's www.annualcreditreport.com. I like to point out, please read, it's annualcreditreport.com. If you see the commercial or anywhere, the free annualcreditreport.com, do not go there, because it's really not free. This is the only one that by law is going to give you the true free credit report. Anyway, and what we recommend is that since you get 3, one from each one, we recommend that you get one at the beginning of the year, another one maybe early summer, and then another one in maybe early fall. That way you can see if things have changed. Let's say if you found a mistake and you try to correct it, by waiting to get the one in about 3-4 months, then you'll see if it was corrected. Okay. Now let me tell you here. I'm going to use something here really cool. This little tool, the laser pointer. Listen, a credit report will tell me or tell your lender just about everything they need to know about you and how you handle your finances, how you pay your debt. It's going to show here, it's going to have public records. If you have collections, it's going to show here. Trades, that means this person here had 17 lines of credit, reporting. Some of them, they could have been already paid off. 7 inquiries, that's 7 inquiries in the last 12 months. Negatives, only 1 account, etc. So here you have, this person had 13 revolving, meaning credit cards, 1 installment, like a car loan, and a mortgage, in 3 mortgages. This could be because they already had 1 mortgage, paid it off, and have another one. See, right now they owe $169. The high credit is $169,950. Their balance is $147,735. Past due, they're past due $10,000. Look at this. Their payment, their monthly payment is $1,700. Same thing here with the revolving. You know, the high credit is meaning what is outstanding is $20,000. Credit limit $41,800. The balances that they have, they're not past due, and their payments, what they have right now is $186 a month. So, and then here, there are each company has a line of a trade line where you have the name of the company, the type of account, the limit, the high credit. High credit meaning how much you're using, or how high you have gone. There is no balance on this one. And then it shows how you're making your payments. So this is kind of like just like a snap picture of what your credit report may look like. Now, credit reports, credit reporting companies, they can report your, usually your information stays in your credit report for up to 7 years. Sometimes people say, so I had this bad credit or I had a repossession. If you wait 7 years, typically that is going to fall off the credit report, but it's not 100% guarantee at the same time. But for the most part, that's the case. Now, bankruptcies, they tend to stay on your credit report up to 10 years. And then like lawsuits or unpaid judgments, they usually also stay on your credit report for up to 7 years or until they're resolved, or the time limitations, until the statute of limitations expires. Now, so how does the companies come up with your credit score? Okay. Now, this is the number one most important thing is your payment history. 35% of your credit score is going to be based on how you pay your credit. So if nothing else, I'm encourage you to try to make your payments on time, because it's super important. The next one is the amounts you owe. And that 30% of your credit score is going to be based on this. And this is debt to available credit ratio. For example, if you have a $10,000 credit and you are using 9,000 of the, if your credit limit is 10,000 and you're using 9,000 of that, your ratio is going to be pretty high. You're using way too much of that available credit. So we always say, try to keep it to 20 to or below, 10% of what you owe, of what the limit is ideally what your balances should be. So if you have a $10,000 limit, hopefully you're not carrying more than, let's say, 1,000 to 2,000 max from month to month. The length of credit history is 15%. Let me tell you this. I had my first credit card, I opened it in 1987 on my name, and I still have it to this day. And the reason I still have it to this day is because that shows in my credit report, it shows that I have had credit since then. And it's a measure, it's a measure of, if somebody is just starting out, maybe they don't have that history of payments. So by having the longest, the longest credit that you've had still on your credit report, it's a really good thing. What we tell people is, if you have, let's say, like a cable bill or something, just pay it from that credit card to keep it active, and then just pay it off every month. So that way you make sure that you always have it available. New credit, okay? This is, when bankers or lenders see you getting a lot of credit all at once, they're going to be concerned. So that's why that 10% of your credit score is affected by that. And then the last is the type of credit. Typically lenders or the credit report likes to give you credit for having a mix of debt. Not all credit cards, not all installment loans. So a little bit of each, a portion of credit of your debt to be installments, and then credit cards. So let me show you. This is pretty interesting. So let's say you have a 780 credit score right now. If you max out your credit cards, this is how low it's going to go right off the bat, okay? It's going to go down to 735 or up to 755. So now let's say the same 780. Let's say you're late on your mortgage. This is how low it can go right from 1 month to the next. If you have the same 780 and you decide that you're going to settle on a credit card, and we're going to talk about debt settlement in a minute, it's not good. Settlement is when you tell the credit card company, hey, I owe you $5,000, but would you forgive me if I just pay you $2,000? Sometimes they say yes, because they rather get the $2,000, versus losing the whole amount if you're not paying, So the same thing with foreclosure. You can see it affects your credit, and then bankruptcy. Now, if you are in any of these situations, do not despair. That's the good thing about your credit score, that it can be improved. The same way that it could be affected down, you can affect it up, okay? And that's what we're going to talk about now. So if you're having an issue, and this is something that when people call us today, oh my God, what am I going to do? My job, I was laid off because of COVID. First thing, you have to pick up the phone. I know it's not easy. I know it's hard, and you think, oh my God, they're gonna think I'm a terrible person or whatever. But no, you and thousands of people are probably going through the same thing. You have to call and tell your creditors your situation, because nowadays in particular, they are encouraged by the government, by everyone, to give you to give you a workout plan, to give you some respite, maybe forbearance or something like that. So talk to them. And one thing that I don't want you to do if you end up with credit problems, is to think that you can fix the credit from one day to the next. It just doesn't happen. I always tell people, if you're driving on I-95 and you get off, your exit, and you see a sign on the side of the road that says, fix credit report, fix your credit in 30 days for $100, don't call them, okay? Because it doesn't work. Nothing works like that when it comes to credit, because even if they may fix it for like 30 days, it will come back. Because if it's yours, it's yours. It's typically the way it works. So so there are ways to deal with credit problems. I told you, first of all, is to contact your lenders, your credit card companies, or if it's a car loan or a mortgage. But then also you may also have issues with your credit, because unfortunately sometimes there are inaccuracies in your credit reports. So as you pull your credit reports, 3 times a year, and you find a problem, you can contact your credit bureau, okay? And you can dispute that problem. Of course, we encourage you that you also call the creditor directly. But if you go, if the creditor tells you, a lot of times this happens, that they, if they're showing that you're late, and they may say, well, we don't show you as late, but the credit report does. So you place a dispute with the credit bureaus. In the old days, because I've been around for a while, we used to call the credit bureaus or write letters. But now, you just go to their website, and on the top there is one, like services or whatnot, and you will come up with disputes, and then you just complete that form, and they have to contact the item, the creditor that you're disputing, and they have to, within 30 days, okay? And while that is the case, that line of credit is not going to show, it's not going to affect your credit. So that's the good thing. Now, Fair Credit Billing Act. This applies to credit cards, unsecured credit only. And this says that if there are any billing errors, listen to this, on your credit card, for example, your credit card statement, you are only liable for up to $50 of whatever the charge is. But you have to report it, okay? If you don't, within 60 days of you finding out, let's say if it goes on your credit card statement this month, you have to report it to the credit card company within 60 days, so that they can give you, take care of it under this Fair Credit Billing Act, law. So these are some protections that you have, that the government actually put in place. Now, if you have also, let's see, if you're going to write, okay, to a credit card company, if you're not doing it online, if you're writing, make sure that you send any kind of information, or sometimes they may ask you for documentation. Everything is online now, but I'm just saying this in case you're dealing with documents being mailed. Don't mail documents for a dispute to the address where you send your payments. In the back, there is usually an address for billing inquiries, okay? And let's see. So this is now what I actually like to talk about the most, is dealing with the credit problems the different ways. In my opinion, of course, I work for a credit counseling agency. And like I told you at the beginning, we're a nonprofit agency, and credit counseling, is free to you, free credit and budget counseling. So you can call the credit counseling agency, and they will, for free, also pull your credit report. And this, again, is a soft credit. And they can, help you or guide you in your particular situation to what your options are and what the best, what they recommend that you do. As far as like what you're trying to accomplish. Are you trying to dispute it? Are you trying to get an extension? They can counsel you on those issues. But also, credit counseling agency like us, we have what it's called a debt management plan. And a debt management plan is a plan where creditors, credit card companies, agree to lower your interest rates and adjust your payments. If you go through the credit counseling agency, nonprofit credit card counseling agency. So your payments go down, and you're making more payments toward your principal. So that's really awesome. Then you have the debt settlement companies, and this is what I was telling you earlier. This is where a company tells you, well, send me X amount of money a month. We'll hold your money in trust, And when we have enough, we'll go to your credit card companies and try to settle for less. Listen, there is a time and a place for everything, but this will affect your credit big time and will stay with you for a while. Okay, so if it's not absolutely necessary, I would try to avoid that, because it goes back to the 5 C's. You know, the condition, the your ability to be responsible for your credit. And the last one is personal bankruptcy. Again, there are situations where that is necessary, but I believe that you should talk to a professional before making that decision. Okay, now we're getting close to the end. So here we have business credit reports for small businesses. Okay, there are, let me go ahead here. I don't know if you've heard of Dun & Bradstreet, but this is a company that that tracks business credits. Okay, and if you happen to be to do work with or for a government entity like the city or the county or the school board, they're going to ask you for your DUNS number. Your DUNS number is sort of like your social security number, but for credit purposes for your business. So it costs some money to get a actually it doesn't cost money to get a DUNS number, but it costs money to keep your information available in Dun & Bradstreet. And let me explain that in a minute. So also the other business credit report is through Experian. If you go to Experian.com and you or Google Experian business credit report, you will come up to the screen that tells you they have different plans. You can get a free credit report, but it only shows certain things, and you have to register your business in order to be able to track that information. Okay, let's see, business credit reports. When you have a business credit report, like the Dun & Bradstreet or Experian, you have to register for that, and you have to input some of that information. There's some of the plans that they have where you actually submit to them your annual tax returns or your financial statements, and they build the credit profile of your company. And if you're a small business, you might not have the need for this. Okay, but as you get larger or start doing business with companies or agencies that require that you have a DUNS number, you might have to do this. But again, if you have any questions, you can call us, and you'll have a number at the end, and we can help you and walk you through that individually, because it's a lot to cover for everybody, because it's just a little bit different. Okay, but the reason why you want to have a business credit report is because like I said, if you're going to apply for equipment, they may want to see how you're making your payments, your business, the credit, how you pay the credit for your business. And it affects your everything from your insurances for other things like that. And also, as you get larger too, you might want to also be able to subscribe to Dun & Bradstreet, so you can see other people's credit report, because you can keep an eye on your suppliers, to make sure that they're good and they're strong and they're in business. At sometimes you need to find out if you're going to be if you should give credit to a company. So it's really a smart thing to do. So learning if a key supplier is planning to go out of business, knowing when a key account begins to get behind on payments, And if you have errors in your credit, in your business credit, it can affect your cash flow as well. So here are some of the places where you can get more information about business credit. And if nothing else, you can always call us and we can connect you, put you in touch with one of our certified counselors that can help you individually. So we are actually at the end of the presentation, and DaVatrice, let me know if we have any questions.
Well, first of all, thank you so much, Maria, for that informative presentation. Very good information. And yes, we do have a few questions. The first question is from Daniel Zuniga. He would like to know, does your business have its own credit score, or is it made up of the credit score of the owners?
Very good question. And that's a really, really good question. And no, your business credit score is for your business only. Okay. But, and this is why we're having this presentation, because and why I went into all that detail about your personal credit, because until you become a large company, all of your credit is going to be based on you. The credit that you get for your company is going to be based on you, on your credit, because they're going to ask you to be the guarantor, if nothing else. Okay, so they're going to be looking at your credit. That's why I say for a small business owner, your credit can be an asset or a liability for the business. Okay.
All right. The next question is from Ms. Sheila. She would like to know tips for someone who is just starting their personal credit at middle age.
Well, tips on how to build credit or create credit. This is also a very good question. What we recommend if you're starting, first of all, let's start small, okay? Let's not go crazy applying for all these credit cards at once. First, if you don't have credit, okay, it's unlikely that you will get credit. And always, people always tell me when I was a banker, well, what comes first, the chicken or the egg? You need to have a credit history to be able to get credit, but you cannot get credit unless, anyway, so you cannot have a credit history unless somebody gives you credit. Well, how you do it is you start with a secured credit card. Okay, that's my best advice for you. If you go to Bankrate and put Bankrate and then search for secure credit cards, you will get a number of those. And basically how it works is that you put down, you give the credit card company, let's say $300. So they will issue you a credit card with a $300 credit. Well, and people say, well, why would I want that if I have the money? Well, because you're trying to build credit, and nothing is free. Okay, nothing is, in this case, it's not just given to you. So and what is important is once you use that credit card, let's say you charge $100 this month, and you get your statement, and it says that your minimum payment is $25. Make sure you make that payment. Because saying, oh, well, they can get it from the money they have, that's not proving to them that you are responsible at making payments. And that's what you're trying to do. You have to kind of pay for getting your credit going in a way. But what the good thing is that if you do that for like 6 months, typically they either raise your credit, and instead of having only the 300, you may then now have 500, 200 of which will be unsecured. And then if you keep doing this and you continue to show good habits of paying on time, typically in a year from when you started, they may say, you know what, you are responsible enough, we'll give it to you now unsecured, and you can get your deposit back.
Thank you. The next question is from Ms. Bestman. Is it correct that business credit card debt will show up on my business credit report and not my personal credit report?
Well, it will show you business credit report, but unfortunately, and I say unfortunately because it's just the way it is, credit card, I was a banker and I used to issue credit card for businesses, but the individuals are always asked to be guarantors. So it's going to show on both.
Thank you. The next question is, how should a small business go about establishing their business credit?
Well, again, is you're going to apply in the name of the business and use yourself as the guarantor, or get a if it's not you the guarantor, you may get a co-signer, but you will most likely always have to be the guarantor. You know, there's just no way of two ways about it, you know.
Okay. And then the
Excuse
last,
me, and even when you even when you have a collateral, let's say you're buying equipment and the equipment is $5,000, they still going to ask for you as a guarantor, so like as extra security.
and the last question is, what strategies can be used to increase business credit, your business credit score?
Sorry, what was again? I'm sorry.
What strategies can be used to increase your business credit score?
Pay on time, pay on time, pay on time.
Okay.
That's
That
it.
was the last.
Yeah, it is. I mean, it is so important. And again, and the second would be not to borrow to the max. If you have, I mean, if it's an installment loan, it is what it is. If you're buying, let's say, a piece of equipment for $3,000, you know, that's what it is. It's not going to go higher, or it's only going to go lower as you make your payments. But if it's a credit card, business credit card, and they give you $2,000-3,000, don't go and charge all through $3,000. Try to keep it at a percentage where it's not, you know, like I said, like a 20 to 30%. Now, in reality, is that always possible? No, I understand, and the companies know that. But will it affect your credit? It will, a little bit. But again, number one is make your payments on time.
Great. Thank you once again, Ms. Gaitan, for your very informative presentation. We really appreciate it. This was great information. And thank you all for attending this webinar. If you have any questions or concerns, please feel free to contact Ms. Gaitan. The slide with her contact information is there for you.